Welcome to today's webinar, compiled and produced by the team at biznews.com. All of our webinars are interactive. We encourage you to pose questions to our guests. The more challenging, the better. And the earlier you get the questions in, the better the chance of having them answered. The recording of this webinar will be available later today on the biznews.com channel on YouTube. Yeah, it's a warm welcome to you from, well, our introduction to cryptocurrencies. We have this going out as well on Twitter Spaces, so something new for us, but there are many people who have come through to the normal BizNews noontime webinar, and let's make sure that everybody can hear what's going on before we indeed kick off today's session. My colleague Stuart Lohman is in Cape Town. I'm up here in Johannesburg. We can put our cameras on now. Stu, do you want to just go through the tech, please?
Excellent, thanks, Alec. Always good to be here. Just quickly, on the right-hand side of your screen, there's a control panel. If you can hear my voice, see Alec and myself on screen, and there's a little presentation underneath. If that's all coming through, there's a little high five button on that control panel. If you can just give me a high five so that we can see and hear that all's coming through. There we go, Alec, got some nice high fives coming through. Just as well, on the webinars, we do keep them conversational. Alec's going to manage the questions today, but there is a questions drop-down menu on that same control panel. If you click on that question mark and put your question there, Alec can pass it on to the two gentlemen he'll introduce you to in a second. But have fun, Alec.
Thanks, Stu. We'll catch up with you a little bit later. All right. Well, Gaurav and Jonty are our guests today. Guys, if you want, there we go. There's Jonty Sachs. He's got his camera on. Gaurav Nair has got his camera on. Our partners at Jaltech, our business partners at Jaltech, and Jonty, you've been trying to get me into understanding cryptocurrencies. I remember our first conversation on the subject. I said to you, no, come on, man, you know, where are you going? What's the whole idea about, etc. But in fact, well, I have been converted, partly because of you, but I think partly because we have gone to, at the BizNews conference, we had Stafford Marcy giving us some insights into that. Would you like to just give us your background, perhaps, on how you got involved in crypto? And of course, your boss, well, your partner. I don't know who's the boss on you guys, but Gaurav, we'll find out why a lawyer and an actuary are now in this whole new world. Jonty?
Yeah, Alec, thanks. And you know, I'll never forget it. I think we were on the third hole in Bryanston, and I turned to you and said, Alec, what's your view on crypto? And you said, Jonty, there's certain topics I never want to discuss, and crypto is one of them. And I kept my mouth shut until about the sixth hole, and then things evolved from there. So, as a business, your cryptocurrency investments made a lot of sense to us because we really try and take more high risk, non-vanilla investments, and we try to package them in a way that the normal everyday person can access them in a vehicle which is, you know, has taken various risk mitigating structures or factors into account. And then we take that to our investor community. So crypto's fast made sense. A lot of people don't understand them. It's evolving really quickly. It's very volatile, and it's complicated. So it made a lot of sense for us to really package it into a solution which can give, you know, the average person on the street exposure to this really fascinating and fast-moving asset class.
Gaurav, how did you come to be involved or exposed to crypto?
Well, I have a sad story there. I think a story that's been heard many times before. I came across Bitcoin in 2010, 2011, so very early. I even bought some Bitcoin back then. And sadly, I can't locate those Bitcoin that I bought back then. Otherwise, I'd be smiling a lot more right now. And eventually,
just
being an entrepreneur,
explain that you can't locate them. Did you put them into some kind of a wallet that you've forgotten the password for?
Well, So similar to that, I had a computer back then that I had saved it on the hard drive. And as time had gone on and being an entrepreneur, just focusing on paying the bills and making money, I lost interest in Bitcoin. And when I replaced my laptop, I took the important stuff out. In my mind, the Bitcoin that I had on there wasn't important. And that laptop eventually found its way into some landfill, I assume. So lost forever.
That's incredible.
Yeah.
So there's no way of actually tracking it back now.
That's right. That's right. I mean, that's one of the reasons why we saw a need to actually come into this space and offer products and services, and that this new technology is so different from the traditional world of financial services. And what we saw is there's a lot of players that specialize in crypto. There's a lot of guys who are scamsters in that space as well. And there didn't seem to be, at least when we were coming into it, many people from the traditional financial world that were offering crypto products that had a reputation and a track record. That's changing more and more. The other day on the front page of Goldman Sachs' website was all dedicated to cryptocurrencies. But we saw the need to kind of bridge the gap for everyone.
No, it is incredible. The first exposure I had to crypto was a piece we ran where Nurul Robini, who's one of the most respected economists in the world, said it's a scam. Then you hear Warren Buffett calling it rat poison. So immediately you move away from it. But the intention here is to share an introduction, a basic program. And we've got a little slideshow. It's not going to last for very long, and then we'll be going to questions. Just to remind you, those of you who are on the webinar, on GoToWebinar, there's a little question mark there. Just click on that and pose your question on the, it's very easy. The way you pose your question is just to type it. I will not repeat your surname. I'll just be putting your first name there. For those who are on Twitter Spaces, today I'm just going to take it easy, guys. It is new for us. So unless you really have a burning question and you really need us to bring you in, maybe today we can just watch as far as Twitter Spaces are concerned. But anyway, if you've got a burning question on Twitter Spaces, you know how to ask the question. Go ahead with it. Jonty, do you want to? Shall I just get cracking on the slideshow, and you can take us through exactly what this is all about? What is blockchain? Is that where we start? By the way.
That's blockchain is really the infrastructure or the foundation of cryptocurrencies, and it's very technical. And as you mentioned, I'm going to just touch on and give people a flavor and a sense of what it is. But really, blockchain is a network where the peers or the people on the network are responsible individually to record transactions in an independent journal, separate from everyone else, versus having a central authority do all the recording, making the decisions. So a simple example is the Reserve Bank. The Reserve Bank makes all the decisions on behalf of the banks and decides whether to increase rates or decrease rates. Look at Greece, where they took money away from depositors, and they are really the central authority, where blockchain does away with that. All the peers participate on the network and record transactions. And I thought the simplest way to explain it is to give you an example of Postnet. So let's assume for a moment that Postnet decides that it wants to run its entire infrastructure of blockchain. And what this would mean is every single branch would be on a blockchain network. And if I came along in Pretoria and I dropped off a parcel, the Pretoria Postnet on its blockchain would record John T. Sachs dropped off a parcel destined for Cape Town. Simultaneously, every single other branch would record the same transaction. Now comes along the delivery man. He picks up the parcel and he drives to Johannesburg. When he arrives there, on his arrival, the blockchain network will record that Mr. X has John T's parcel, has arrived in Johannesburg. And simultaneously, every single other branch in the country will record that this has happened. Now, there are lots of benefits to this. One is the driver can't collude with a branch manager and take my parcel or erase it on the journal or on the ledger, because every single other branch would need to erase it. So it really makes it difficult in this instance for fraud to occur, and the tracking of parcels becomes unbelievably efficient, and the only point of really failure is the driver. In between Pretoria and Johannesburg, something must have happened in order for the parcel to have gone missing. Now, this is a basic example that we're using with Postnet. There are many, many businesses that will in time start adopting blockchain, and we're seeing it already globally. Companies, particularly in the financial services sector, are looking at blockchain. Another great example is the JSE. Right now, if you buy shares on the JSE, you have to go through Straight, which is the central authority which stores all the data of who buys and sells. And last year, the JSE had its largest trading day, and the following day only opened much later in the day because it had to process all the trades. Where if this was done on a blockchain, you'd have lots and lots of miners authorizing, confirming every single transaction. It'll be done really, really much quicker and much, much cheaper and more efficient.
Gaurav, just to maybe illustrate this a bit more, and I'll ask you a question. You do one transaction on a blockchain, and we're going to move on to cryptocurrency in a moment. And then every single part of that blockchain, every single ledger, if you like, you imagine a whole bunch of accountants everywhere in the old days would be simultaneously writing down that transaction. Have I got it right there? Is that what Jonty's telling us?
Essentially, yes. One party validates the transaction, and then everyone else checks that the transaction is indeed valid. That, Alec, if you had one Bitcoin and you were sending it to Jonty, that you do indeed have that money and that you are indeed sending it. And then to decrease your balance and increase Jonty's balance, and everyone else then checks that and agrees that happened.
So, Jonty, from this perspective, the guy in George, even though he's got nothing to do with a parcel that goes from Pretoria or from Johannesburg to Cape Town, he's also going to see in his record, in his blockchain, in his ledger, that parcel has been sent along the way. Okay, we really don't want to go to too much detail on the presentation, but what are the opportunities then that this blockchain on which you can maybe tell us a little bit more about the cryptocurrencies that are there, but what investment opportunities then does that present?
Yeah, I think majority of people, when they hear cryptocurrencies, the first thing they think about is blockchain. And blockchain, the first thing they think about is Bitcoin, or a digital currency that is trying to replace or compete with the dollar or the rand. And that is a component and a significant market. Bitcoin has a significant market share in the market, but there are hosts of other investment opportunities out there that people need to understand and explore, because the investment cases, personally, I believe, are enormous. So just to touch on the three of them, is if you look at digital currency as a means of currency, it's competing with the dollar and the rand, the yen, etc. If you want to just jump on, Alec. If you look at Bitcoin and how it's really ramped up over the years, and adoption rates have really gone through the roof. If you invested in Bitcoin 5 years ago, you would have seen a 5,000% increase in the value of your investment, and it's because of the fundamentals behind Bitcoin. If you compare it to the dollar or the rand, these currencies can be increased. The Reserve Bank, the Fed, can simply print dollars, and we've seen this now, and we're all feeling the repercussions with inflation. Where in the cryptocurrency market, there's in many instances a limited supply. Bitcoin, there'll only be 21 million Bitcoin, and if you apply normal demand and supply principles, because there's a limited supply, price, if there's demand, will go up. Bitcoin is divisible, as with most cryptocurrencies. It's transportable, and the transportability of this is what really excites me. If I'm sitting in bed Sunday night, a friend in America needs money desperately, if I go onto my bank and I transfer the money on Sunday, maybe it'll arrive there Wednesday, Thursday. In the cryptocurrency world, we're talking minutes or seconds, depending on the blockchain network being used. And that's the real benefit here. Is it's quick, it's fast, it's much cheaper, and we're not limited by banking hours. It's recognizable, it's durable, and most importantly, it's decentralized. You don't have a single authority making decisions on the collective.
It's interesting the point that you raised there, and Gaurav, maybe from your perspective, I know you guys have read a lot, but Stafford Marcy suggested we read the Bitcoin Standard as a starting point, and it's a fantastic book. It certainly turned my mind around. But he makes the point that Jonty touched on now, that central banks create money, and as a consequence, there's continuous increase in supply, and as a consequence, the value of what you're holding depreciates. Whereas with Bitcoin, the value of what you're holding, if people agree that it's all of these things that Jonty said now, scarcity, divisibility, transportability, recognizability, etc. In other words, if everybody suddenly believes that this particular cryptocurrency is a store of value, then you know it's not going to increase. There are not going to be too many more of them. And as a consequence of that, you would see an appreciation over time.
Yeah, so Alec, I don't know if you've seen ARK Invest's recent research on cryptocurrency. They estimate Bitcoin's market cap in the next 10 years to reach $20 trillion. It's hovering just below $1 trillion, I believe, right now. And they make it up in portions. One of the portions is to be used as money. And one is because it's so easy to pay, as Jonty just explained. But another thing is that it's neutral. We've seen now with Russia invading Ukraine that the US and the rest of the world has confiscated $650 billion worth of their forex reserves. And we can argue that that's a good thing. But nonetheless, a lot of countries seeing this have said, a centralized authority is actually a scary thing. We need something that's credibly neutral. And potentially that answer is going to be Bitcoin because no one controls it. It's totally decentralized, and no one can just print more or ban you from the network. That they can't do that either.
It's an interesting point. Again, Stafford said that the greatest marketing or the chief marketing officer for Bitcoin is Vladimir Putin, because by invading Ukraine, he brought a focus onto this. And I think your 650 billion example is massive. Had the Russians realized what would have happened to their assets around the world, they certainly wouldn't have been holding them in dollars or any fiat currency, as it were. Jonty?
Yeah, and absolutely. It was quite interesting to see the flows and the increase in value of cryptocurrencies during this war. One would assume that that money would flow out of risky assets, but they haven't. And just in the last week, cryptocurrencies have absolutely flown 5 to 10% across many, some as high as 30%. So I think in times of difficult times, it appears that there's still a lot of volatility and interest in this space. So I think wars is a good test for this asset class, and it's doing well.
We have got literally dozens of questions that people are wanting to ask, but perhaps we can just touch on this subject of utility tokens quickly.
Sure. So I mentioned the first investment option is digital currency, Bitcoin, Litecoin, etc. The second really excites me, and that's utility tokens. And these are cryptocurrencies which are linked to, for example, a blockchain. So if you transact on the Ethereum blockchain, you don't pay a fee in Rand or dollars, you pay it in ETH, which is the native token to that blockchain. So what happens is the more and more people that are or companies that are adopting blockchain, what will happen is there'll be more and more demand for, in Ethereum's case, the Ether cryptocurrency. Ether has already seen over 1.2 million trades per day. So more and more businesses, and that's what this round circle is demonstrating, is more and more protocols, businesses in this ecosystem are adopting Ethereum, and as a result, the price for ETH has really gone up. And if you compare the market cap of Ethereum to the likes of Bank of America, JP Morgan, already it's overshadowed these huge institutions that have been around for many years. The third investment is really in protocols or businesses that have now adopted blockchain as their underlying technology. And I've singled the one out, and it's a protocol called Aave. If you are a real proponent of cryptocurrency, you don't want to sell it, but you might need to fix your roof and you need some cash. So what you can do is simply deposit your cryptocurrency with Aave, and Aave will give you a loan. Or if you want to earn a really high interest rate, you can deposit your crypto with Aave and earn interest. This is called, in some cases, yield farming, where you can generate significant yields. Now, Aave is an amazing protocol. Already has just under $250 billion in digital currency deposited. It has loans in the market of 51 billion. And the most incredible stat, it has 0 employees. This protocol runs seamlessly, quickly, efficiently, versus going to a bank and applying, waiting weeks, months, and getting rejected. Here, we're talking in a matter of minutes. You can have access to, a lot of money depending on how much you prepare to deposit. So if you understand this DeFi world, or this world of opportunities that's growing in the crypto world, which is using blockchain as their technology, there's a big investment case for different protocols. Then there are other spaces where I'm not going to go into: yield farming, NFTs, Metaverse. These all require their own webinar, because these are really exciting spaces in this ecosystem that are growing at an enormous rate.
So who should be investing?
Majority of investors have within their portfolio an allocation to risk. In that risk allocation, there's high risk allocation and a moderate risk allocation. And my personal view is cryptocurrencies fall within the high risk. So if you have capacity in your portfolio for high risk, I think cryptocurrencies should be one of the investments. And the reason being is the return profile. I mentioned it earlier. If you invested in Bitcoin 5 years ago and you're still holding it today, you would have made 5,000% return. If you go back 10 years, the numbers are incredible. If you invested 100,000 Rand, you would be worth 30 million Rand today. Now,
well, as Gaurav will tell you, to his detriment. Yeah.
Detriment.
But
yeah.
But just, I really do want to get to the questions. But before we go there, you've outlined that it's not just Bitcoin. You've spoken about Ethereum. You've spoken about other cryptocurrencies that exist as well. And I know, and the reason why I think we're doing this webinar is actually just to understand how you guys have packaged something, because I guess you could start off and just say, well, here's Bitcoin, we'll sell Bitcoin, or we'll have a vehicle to Bitcoin. But you've taken a slightly different approach. Can we just spend a couple of minutes on that quickly and then get to the questions? Gaurav?
Yeah, sure. So if you look at the universe of cryptocurrencies, if that's where you wanted to start, there's 17,000. It's difficult to pick. And from that, the hardest thing is indeed picking winners. I often liken the cryptocurrency revolution that's happening now to the early days of the internet. And even if you knew that the internet was going to be as big as it is, it's hard to pick Google instead of Alta Vista or Yahoo. It's hard to pick Facebook instead of MySpace. And so how do you pick the winners? And if you take in a strategy of indexing, you say, I believe in the internet, I'm going to buy the biggest ones. As something new comes along that's getting bigger, I'm going to rebalance, sell a bit and buy into that. And as something does worse, I'm going to rebalance out of it. And if you've just done that and not had any ability to pick winners, you would have done extremely, extremely well. So we've taken the same approach here. We've created a basket. The basket is weighted by market capitalization. So the bigger ones get a heavier weighting. However, we imposed a cap. If we didn't impose a cap, about 80% of the basket would just be Bitcoin and Ether. So we maxed the exposure of a single coin to 30%. And then we looked at all the cryptocurrencies that have a market capitalization of more than $2.5 billion. This weeds out the cryptocurrencies that are fly-by-night, that haven't got much acceptance yet, haven't proven themselves yet. We also then removed any cryptocurrencies that are stable coins. They try and maintain a peg, so they have no scope to grow. We removed those as well. And then from there, we looked at which projects don't have any security issues, are decentralized enough, have enough liquidity, can be stored securely. And in that way, we then removed a whole bunch of tokens. What we're left with is the following 9 tokens. It's a mixture of cryptocurrencies, a mixture of blockchains and their native tokens, and then a mixture of protocols that are useful. So Aave was the example that John T went into. So I'll just quickly list them out for the benefit of the guys on Twitter Spaces. We've got Bitcoin and Litecoin as the currencies, blockchains, Ether, Solana, Polkadot, and Polygon, which are some of the biggest chains that have proven themselves now. Uniswap, Aave, and Chainlink are some of the biggest protocols and have lots of use in decentralized finance.
And Aave, there's a question here from Peter who says, how do you spell it? A-A-V-E. A-A-V-E. Right, let's get to some of these questions. And just a reminder, if you're on the webinar, there's a question mark, click on the question mark and type in your question. We will only refer to you by your first name to keep anonymity. Kathleen says, I've just watched the show Trust No One by Jerry Cotton. How likely is this to happen again? John T?
I'm not too sure I understand the question.
Have you seen the show? Have you seen the show, Gara?
No.
No, I haven't seen the
Okay,
show
well,
either.
if neither of you have seen the show, well, then we're going to have to pass on. Sorry, Kathleen. Louis, what I do not understand is, where does crypto get its equity from? There's no asset value opposite it. How is the value determined and protected against speculation?
Should I go into that? Okay, perfect. So when it comes to coins like Bitcoin, the value is very much based on the fact that someone else is willing to pay for it. Someone else sees value in it. It's a bit like gold, and Bitcoin's often called digital gold for that reason. And if you look at the price of gold, it's not because it has some tiny industrial uses and uses for jewelry. Most of it is because someone's willing to pay that value. Humans recognize that value. And because Bitcoin is credibly neutral, as we talked about, it has these uses for payment, and some people believe it's going to increase in value. That's where it gets its value from. It's from just an acknowledgement from other human beings that I'm willing to pay for this. But when you come to some of the other coins, they have uses. So for example, if you want to use the Ethereum blockchain because you want to use Aave or one of those other protocols, you need to pay your fees with Ether. And they call those fees gas, like gasoline. And Ether is very much like the oil in that network. If you want to interact, you need to pay to interact on that network. So the demand, so Ethereum has demand because people want to use the network. As adoption grows, you can imagine that demand then for Ether also grows. And then of course you get speculators who believe in that, who say, just like in the oil market, if people believe the oil price is going to go up, people buy oil just to hold it. In the same way, you have a lot of people that buy Ether for that reason. And then finally, you get the protocols. And the protocols are the most close to equity from the traditional world. Often a token is analogous to a share. What does a share give you? It gives you the right to some earnings, and some tokens do that. The protocols, they earn fees when people interact with them. If you deposit some money with Aave, it lends it out and it makes a little margin. So there's some fees that may be payable to you, and it gives you a vote. So sometimes the protocols want to enact changes, and whoever holds the tokens, they can vote on yes or no if they want that change to go through. So that's the most analogous to a share. But just like anything that's revolutionary and new, this is new technology, it doesn't fit in exactly with kind of the previous world and the previous analogies. It's so much more than that.
Louis, I'll tell you where I kind of got it for the first time. I wrote a book many years ago about how to invest in the share market. And in the process of researching this book, I discovered an island called the island of Yap, which is out in the Pacific. Anyway, I'd kind of forgotten about it, but what they used in Yap were their monetary system were big stones, which were brought in from an island a long way away. So to get to the stones, these islanders would have to go on their dugout canoes, mine the stones in a very primitive manner, and they were particular stones of a particular kind of granite, bring them back to Yap. They were difficult to mine, it was expensive, they were rare, and because of those two things, they used them as a source of value. And what happened in Yap was, interestingly enough, there was a fellow called David O'Keefe, an Irishman, Irish ship captain, who got stranded at Yap, and he got shipwrecked there. And he saw this, and he, of course, had an idea that he could own the island or become the king of the island. There was even a movie about the guy. He went off to Hong Kong, went and got miners, and modern equipment, this is 100 years or so ago, went to the island where the yappers did their mining. He brought modern equipment, mined out the granite, took it back to Yap and said, here we are, I'm the richest guy on the island. And of course, he debased the currency, and that was the end of the Yap story. But what was important about this, and this comes from the book, The Bitcoin Standard, is that through history, we as human beings have found something that we use as a source of value, as a store of value. Gold has been incredibly good in that way because you can't add to it, or you can't add excessively to it. There's a huge stock of gold that is everything that's ever been mined, and the miners today can only add about 1.5% to the stock, which means if you imagine the Federal Reserve, they wouldn't have been able to flood the money into the system to trillions and trillions of dollars created out of thin air, both for the global financial crisis and now most recently for the COVID crisis. Here in South Africa as well, where the debt in this country has just gone mad because the authorities have created money, created rands out of nowhere. And this is where the digital currency, the new gold, as Gaurav was talking about it, exists, where the benefit exists, is because because of the protocols. I think there's been just over 20 million, according to this book, of the Bitcoin that have been mined. By 2050, there'll be 2150, there will be the final 21 million. And it's as you get less and less Bitcoin, it becomes more and more expensive to mine, and that enhances the value, but you can't add to the stock. So when you look at this and you say, well, other people also see this as a store of value, then it becomes a store of value because humanity agree on it, as they agreed on gold and as they agreed on cattle in times, well, here in this country, and so on. So you kind of get it there. You've got to look at it with a very different eye. And I'm sorry to have dominated the conversation. We got experts here to answer that, but I just felt that would certainly help me to understand it, Louis, and hopefully it does too on your side. Niels has got a question. He says, what's the difference between cryptocurrency, tokens, DeFi, and NFTs? Jonty, it's a big question, isn't it?
Mm-hmm. Yeah, well, NFTs are really, I'll give you a nice way to explain it, is a opportunity or a means of taking something in the real world and putting it on a blockchain. And that's where I see NFTs in the world to come. So let's take a simple example. Right now, if I want to buy a home, it'll take me 6 months to transfer the house onto my name. In the future, what will happen is, potentially, is homes will be NFTs. They'll be digitized in a little image on a blockchain in the master's office. And if you want to buy my home, or if I want to sell my home, I will sell the NFT. Because as I explained earlier, the blockchain, you can't mess with it. You can't go in, change records, because there are so many different participants or peers on the network which will prevent you from doing that. So it's really difficult to falsify. So NFTs are really an exceptional way of taking a real world asset and putting it onto a registry. NFTs in the sense of digital art, I can't wrap my head around it. Billions of dollars are being invested in it. I don't have a personal use for a digital image of a monkey. I don't get it. So that's a real world physical asset, which I think NFTs are going to play a huge part in. Digital currency are playing in a different world, and I mentioned 3 cryptocurrencies. There's a digital currency, there's a utility token which is linked to a blockchain, and then there's a token which is then linked to a protocol, and they're very distinct. I don't know, Gaurav, if you want to add to that.
Yeah, sure. I think you explained it really well, John. But just to maybe help us empathize with people that do like NFTs, I'm not one of them, but I can understand if you consider real world basketball cards or baseball cards, some of those sell for thousands of dollars, if not more. And the reason being that people take some joy in owning the original. It isn't the cardboard, it isn't the print. It would be quite easy to make a perfect replica for a few cents, but it isn't about that. It's about the fact that I own this original 1986 Michael Jordan or whatever it is. And if it was a replica, it wouldn't be worth it. So that's, I think, what the joy people get out of NFTs, that you have these objects that are scarce, you can make an exact copy because it's digital, but that's not the original that the person owns. And so that's the closest analog. If you can empathize with people that collect basketball cards or something like that, then you can also understand, I guess, people that collect these little picture NFTs. But the real world uses that people see is to put these assets that aren't interchangeable. So a dollar is a dollar, those are interchangeable, but a house is not a house. Each one is different, and those non-interchangeable assets, people are probably going to put them on the blockchain in the form of NFTs.
Niels, I did an interview this week with Aaron Postumus, who's the CEO of the South African NFT or non-fungible token exchange. It's called Moment. And the way he explained it, and they sold 8 million rands worth of NFTs just last weekend, actually. He said many of the NFTs also carry other benefits with them, like those apes that Jonty was talking about. If you buy one of the Bored Apes, you become one of 10,000 people in the world who are a member of the Bored Ape Yacht Club. And the Bored Ape Yacht Club gives you certain benefits. So it's a whole new area. But I ask you this, what do you think in the digital world the very first article published on BizNews would be worth? I think somebody would want it, especially BizNews is a big organization now. To some person, it would feel that, hang on, I own this. You know, this is my collectible. So it's not just the baseball card analogy. There are many, many, many other ways. And the digital world is a replica of the real world. So as a consequence of that, there are people building houses, building brag spaces in the digital world, and they want to populate that with art, and as long as it's rare, I mean, I wonder what the digital value of the Mona Lisa would be if there's an NFT on the Mona Lisa. That's got to be worth a little bit. Anyway, these are whole new concepts, and that's why this is really part one, and I think in part 2, 3, 4, 5, 6, going up to however many, we'll find out more about it. Gillian's question is my biggest question. Can I keep the government out of my money on cryptocurrency?
Well, if you have a look at what SARS is looking to implement, so there's now a requirement from SARS to disclose your ownership of digital assets, and that's the way that they're going to be able to tax this space. So when you submit your e-filing, you have to indicate how much cryptocurrency you own. Now, a lot of people will say, okay, well, I'm just not going to disclose. They'll never know because I hold it on my wallet. But unfortunately, the exchanges, the Valas, the Lunas of this ecosystem are going to have to report at some point that Jonty has a Vala account and he's bought X amount of Bitcoin. And if I don't disclose that, then I'm definitely opening myself up to a penalty or a fine. But on the point of SARS, and I brought it in, is the question of tax. And I'm sure someone will ask the question as well, answer it, and we received an opinion from ENS Africa, it's the largest law firm in South Africa, and they've confirmed that if your intention is to hold cryptocurrency for a long period of time, rule of thumb more than 3 years, then it's going to attract capital gains tax. But if you're going to buy and sell, well, then you're going to be subject to income tax. So this talks well to this asset class, because this isn't an asset class where you should be buying and selling. You know, people who come to me and they say, you know, have you seen this chart? It's making an M, that means that the market's going to go up. I don't really believe that anyone can predict this market. You know, if you saw what happened in China banned crypto, and you would imagine that the price would have dropped because supply in the market would have been enormous. The opposite happened, the price went up. So it's a very hard market to predict. So if you're an investor holding for more than 3 years, which I think people should be, then it'll attract capital gains tax.
If you went and bought gold 20, 30, 40, 50, 100 years ago as a store of value, it has managed to retain its store of value. And I guess that's really what the digital currency or the Bitcoin bulls are saying about that. But really well put there on the anonymity of Bitcoin, Jonty, because any asset that you own, we live in societies where everybody, especially the taxman, wants his cut. John asks, he says, it's still so complicated with so many questions before one can buy from Jaltech. Questions seem to be very invasive, or am I wrong? Well, okay, John, I don't think so. I think this is part one, and we're going to learn as we go along. Willem's question is this limited supply of Bitcoin not eroded by many cryptos on offer? Gaurav?
Yeah, so I think that when it comes to Bitcoin, it's seen as the original cryptocurrency. And it also has a bit of a different use case to some of the other blockchains we talked about. However, again, taking an analogy, an imperfect analogy, Bitcoin is a bit like the dollar is to other currencies. It's seen as the safest one. And so from that point of view, it has a unique status. And so people that are looking for a store of value or this digital gold story, they're not looking at other cryptocurrencies. They're mainly looking at Bitcoin. When they look at the other currencies, they're looking at it more from the point of view of investment. Bitcoin also has that case. It's often a good idea to hold gold during periods of turmoil. Gold tends to go up during those periods. So Bitcoin also has a good investment case. However, when it comes to other currencies, people are looking at it. This one's got a special use case. It's an especially fast blockchain, or it's got applications in finance, etc. And so that's more what the other currencies are trying to fill. It's trying to fill those gaps of an investment case. Bitcoin has this unique status as the first one and the safest one, the most decentralized cryptocurrency, etc. So it's not really eroded by the emergence of new currencies.
I like that. I like that answer. And the other part to that is the way it's been described is through history. We had gold, which was the premier currency. Then there were coins made out of silver, and there were also coins made out of bronze. So there are going to be other stores of value, in inverted commas, no doubt, in the digital world. But where you started, Jonty, when you were talking about Ethereum, for instance, the value there is a utility. So it's as this blockchain expands and explodes, there are going to be different currencies or different linked units, which would then also have a value of their own. So again, we've just got to get our heads around the fact that currency or money doesn't have to be a note that is issued by a central bank which says, I promise to pay you on demand. What? Well, actually, another note.
Exactly right.
Okay, let's get on to Louis. Another Louis asks, who is authorized to create a cryptocurrency? Is this creation not unlimited?
I'll take that one, Alex. So each cryptocurrency has different rules. With some cryptocurrencies, the rules are that a certain team, let's say the team that's building it, that they can issue or destroy them. Sometimes there'll be a central authority that has the authority to issue more. So a cryptocurrency can be designed to be similar to a normal currency in that you can print more. However, if we just take, let's say, the two biggest ones, Bitcoin and Ether, when it comes to Bitcoin has a set issuance schedule. So no one can go out and issue more at their will. You have Bitcoin miners, and by their activity of mining, roughly 6 Bitcoin are issued, I think it's every 10 minutes. And that's the rate until about 2024, I think 2025, and then the rate halves. And that keeps happening again and again until it gets to 21 million total. So there's no single person who can actually change that rate. And so that's baked into the code, and the code can't be changed by any single person either. And when it comes to Ethereum, it's very similar. There's a set issuance rate. There's no limit. So it isn't that when it gets to a certain number, it stops being issued like with Bitcoin. However, there's a set issuance rate, and that rate can't be changed by any person. They can't go in there and say, I'd like to print more because the economy's crashing, like we have with the normal fiat currencies.
We've got 15 minutes left for the webinar today, so let's try and get through the questions quite quickly, as many as we can. Ian's one is, should businesses hold a portion of their cash in the form of cryptos? And if so, what cryptos should they hold, gents?
Well, if you have a look at what's happening internationally, the likes of Tesla, Microsoft, they're buying into cryptos. So again, similar to an individual investor, if a company is in a position where it can hold a risky asset, well then, it's for the directors to make a call. Personally, Jaltech, we hold a lot of crypto. We've invested a lot of money in our baskets, in Bitcoin. So we believe it, and it's done really well for us.
I'd just like to, John, I think you said Microsoft and its MicroStrategy that's bought tons and tons of Bitcoin. They're just issuing debt to buy more Bitcoin. And the CEO there, Michael Saylor, so what he says that in essence, we have kind of paper currency which is inflating away and the value is dropping. And so he's seen that his business, it's a listed business, is in a position to borrow at almost zero rates because interest rates are so low. So he says he's going to borrow this inflating currency whose value is dropping and buy a lot of Bitcoin whose value is increasing. And so many CFOs out there, Michael Saylor has driven this message out there and convinced a lot of people. Many CEOs have started to take some of their treasury, which they are not spending immediately, and invest that into Bitcoin in order to protect it from inflation or outpace inflation. Of course, because it's so volatile, if you've got to buy stock tomorrow and you put it in just for the day, it might drop 20%, and then you're in trouble. However, over a multi-year period, there's a very high chance that it's going to be much higher than the price you came in at. So if there's a portion of your treasury which you're not going to use for a period of 2 or 3 years, that could be an appropriate portion to put into Bitcoin. However, there are caveats. This is a new territory we're in. It's a new asset class. It's only 11 years old.
Mr. Saylor's company is called MicroStrategy Incorporated, and the code in NASDAQ is MSTR, and we're in the process of adding 5% of the BizNews shift portfolio is going into that company, and on the pure reason that it's a Bitcoin play, and the number of Bitcoins in the company, we multiply it by the market price, the company's shares trade at about a 5% discount. So you get the whole company for free, and you actually having a Bitcoin investment, because we've also, like Petfillion, we've decided we're putting a little bit of the portfolio into Bitcoin. Michael asks, it's quite a long question, but let's go for it. I understand that convenience is a large draw card for cryptocurrencies. How much of a role does the fact that it is currently unregulated play in that attraction? The reason I ask is because it is clear that governments will catch up at some point with regulation, same as is occurring with social media platforms currently. My assumption is that this will affect the value of the currencies if that is the case. How much risk, in your estimation, does this pose to investors, understanding that this calls for speculation? And I guess this is all to do with regulations, and I'm sure one of you is going to refer to the recent announcement by Joe Biden in the United States on this subject. Jonty?
Yeah, so I've personally written quite a bit on this topic, and I think that the fact that regulations aren't in play at the moment is a once-in-a-lifetime opportunity for investors. Because invariably what will happen is, once regulations do come in, institutions, pension funds, banks, large funds will then be allowed to invest a certain sum of money in cryptocurrencies. And what invariably will happen is that the price will go up. So I think from an investor's perspective, there's really a nice opportunity. And not to oversell our product is, if you focused at large cap cryptocurrencies, that's where the money I think will go, because what's going to happen is institutions aren't going to be investing into small cryptocurrencies with a small market cap, speculative. They're going to be investing in the bigger players, and I think that's where we're going to see huge growth. And if you see globally adoption, to your point, Alec, there are so many countries that are now looking to adopt cryptocurrencies. So Joe Biden came out, was it last week or the week before, not indicating what the regulations will be, but a clear indication that there will be regulations. And that's really positive for investors, because what this means is it's here to stay. You can have the biggest economy in the world completely open to cryptocurrencies. There are senators in America that are saying, vote for me as your senator, because I will make sure that Bitcoin is going to be available to you. And there are countries, South Africa, we're anticipating this year for regulations to come in. The Treasury has indicated that there's a working group, they're working on it, and we're hoping it'll happen this year. And I think globally we're going to see it happening. El Salvador has adopted it as a currency, and more and more countries are doing so. Unfortunately, China hasn't, but again, it didn't affect the impact on cryptocurrencies. But from an investor's perspective, I think investing pre-regulations is a really, really good opportunity to see a lot of growth.
Quick answer to Paul's question. He says, what or who stops any more Bitcoin being mined after the 21 million, Gaurav?
So as I said, it's actually baked into the code. And as we currently sit, there are hundreds of thousands, if not millions of computers currently trying to mine Bitcoin, trying to actually get these Bitcoin. Now, most of these people don't even know each other. I mean, I could fire up the program on my computer and try and mine Bitcoin too. And if one computer tried to change the code, let's say I thought, geez, I'm going to just award myself some Bitcoin or be able to issue more, then the rest of the computers on the network would reject me, and I wouldn't be able to do that. So the only thing that stops someone from going over the 21 million is consensus. 51% of the people on the network have to agree. So the code could be changed, presumably, if half the people running Bitcoin on their computer actually agreed that, okay, they wanted to increase this from 21 million to 25, 30, whatever number they wanted to do, then it would change. However, coordinating all these people would be very difficult, and we need to convince them it's a good idea. A lot of these people have invested huge technology into this endeavor, and if they increase the supply all of a sudden, it will probably crash the price. So they don't want to do that. They've got too much at stake to do so. So it's highly unlikely that everyone will coordinate to increase the supply of Bitcoin over 21 million.
If you owned a lot of gold, would you actually be celebrating if there was a huge gold strike somewhere else in the world? Obviously not. Louis, Gaurav, to you as well. He says, you mentioned the risk of network access. How is access protected, and what will happen if access is interrupted for a long period? That's, I suppose, on the internet access. Can it be transferred as part of one's estate inheritance?
Yes, so, I mean, as we currently sit with an almost $1 trillion market cap, people estimate by looking at the movement of Bitcoin that about 20% has been lost forever. That's $200 billion of value. And this is in a similar way to my story. I'm part of that 20%. I'm sure it's happened where people have invested in Bitcoin, saved it on a USB, and passed away. Their heirs find the USB, maybe they don't find it. Even if they do find it, it's password protected. And unlike other programs where you can click forgot password and you get a convenient email, that's not how it works with Bitcoin. So once you lose access, you lose access. And so this question of how do you actually protect your access to it has been a very important question. At the same time, it's not making it too easy, because then someone can hack it or steal from it. And so there's been the rise of people that provide custody services. What they say in essence is, and Jaltech, we offer it too, what they say is, we'll take care of the Bitcoin for you. We develop technology solutions and protocols, and you split the authority so no single person can access it. There's a lot of science that's gone into this, and best practices that have gone into this. And as part of this, it also then allows you to manage your estate. So, you know, your heirs are either listed with your custody provider, or if not, the official executor, when they present their credentials, the custody provider can then pass on the Bitcoin to the relevant heirs.
I'm going to try something here. We have got a number of people who are listening to us from Twitter Spaces. If you'd like to ask a question on Twitter Spaces, just request it, and I'll put you on before we finish the webinar. So I must admit, it's new technology for me. So if I press the wrong button or something, forgive me in advance. On to the next question, and this is for you, Jonty, from Niels. What role do you imagine with all these cryptos playing in the metaverse, currencies, protocols, NFTs, etc.?
I really think it's going to be not the future for all of us, but a huge portion of people are going to be working and living in the metaverse. I think there's lots of benefits, there are lots of negatives, and one of the benefits is the fact that you can work anywhere in the world and put on your headphones, your virtual reality glasses, and feel as if you're sitting in the same offices that you're accustomed to, looking left and seeing your colleagues and being able to operate. And I think that's the world where we're going to. You know, think about psychologists. In South Africa, we've got a huge volume of really world-class psychologists. They can provide services to someone in America, where the person puts on their VR goggles and It's as if they're in the same room, getting serviced by some of the best at a rate which is a fraction of the cost in America. So I do think it's going to play a huge role, but for many of us, not. If you're a plumber, if you're an electrician, if you're a doctor, most likely you're not going to have an opportunity in the metaverse. But I do think it's going to play a huge role, and it'll just globalize the world, really.
I mean, I'd say right now we're already in the metaverse. I mean, this is what's happening right now. And I think the role cryptocurrency will play with it is that it'll allow also the ability to transact. So right now, if we were doing a business deal, we're all in different places, and I want to pay you, Alec, a way that's independent of any state, because we might be in different countries, etc. And so cryptocurrency will play that role. And the final piece, NFTs, will be how we have digital goods. If I want to show you my license, if I'm a doctor, we're practicing online, I'll show it to you via an NFT that you can validate on the blockchain. So I think the metaverse, we're already partially in it. It's going to just take up more and more of our lives. And we need currencies, and we need ways to show each other our credentials, etc. And that's what cryptocurrencies and NFTs are going to be.
I recall in 1997 when I started getting involved in the internet and started an internet publishing company, people were then very dubious that internet would replace newspapers, that you would even have something like what we have here in a webinar. These were all done in physical rooms. And I guess that's something that we need to remind ourselves, that the world is changing at warp speed. Jeff has got a question. This last week, there was a report of someone who lost or had stolen around 500 million rands worth of tokens. How did that happen, given the supposedly high security?
I'll speak to that. So there are, in fact, events all the time that are happening like this. So I might not be referring to your specific event, Jeff, that you have in mind, but here's the typical ways it happens. The blockchain itself, and especially ones that are very established, like the Bitcoin blockchain and the Ethereum blockchain, they are very difficult to launch an attack on, because, like I said, you have to take control of more than half the computers. However, there are other ways that people end up hacking or stealing funds. Sometimes there are these things called smart contracts. Aave is a protocol, for example. There are lots of protocols out there. People put some of their cryptocurrency into those protocols to earn interest, etc. The way that protocol is coded is often not safe. And so someone finds a gap or some trick they can use, and they manage to hack into that, and they manage to steal the funds out of there. Another way, which is more boring, more mundane, is people often get tricked. You know, if you're taking care of a lot of cryptocurrency and you get phished, someone gets into your computer, someone tricks you, you leave your computer logged in, you walk away, so those are called social hacking. You could get socially hacked, and in that way, people steal the funds. And when we see it in the news, we just see it all under this heading, you know, cryptocurrency stolen, cryptocurrency hack. But it's usually not the blockchain. When it comes to Bitcoin or Ether, they've never been successfully hacked, ever. It's usually either these smart contracts or someone hacking someone else's computer, kind of very mundanely.
Final question from Henk. How do I go about actually buying a Bitcoin? Do I buy a complete coin or part of a complete coin? Or I guess, John T., do I buy the Jaltech basket?
Yeah, it's not too difficult. So what would have to happen is you'd have to go and download an exchange app, so either Vela, Luna, or one of the others in South Africa, and go through a process of opening an account, being featured, and then transferring money, and then knowing how to buy it. It's not extremely complicated. The issue you do have is custody. And if you have a look on the BizNews homepage today, you'll see an article I wrote on custody, because keeping your cryptocurrencies on an exchange isn't always the ideal solution. Many exchanges around the world have been hacked, billions of dollars have been stolen. So yeah, you can do that, or you can come to us. We also offer a brokerage service where we can buy it and hold it for you. But accessing cryptocurrencies nowadays is pretty easy.
Can you buy a portion of it? I guess through Easy Equities you could. They've got baskets. Your basket must also, presumably you work in fractions, yeah. Yeah.
Well, in the Bitcoin world, it's called a Satoshi, and that's one of the benefits of cryptocurrencies. You can really buy a tiny amount, so it's really divisible into infinite numbers.
Well, gents, we have many more questions here, so we will have a part 2 very soon. We'll be letting you know about that. I say gents, meaning my guests here today, all the gents and ladies who are in the audience. Thanks for those questions, so many of them. Apologies for not being able to get around to all of them, but we will at the next time. And to those of you on Twitter Spaces, thanks for joining us today on, for us, a fairly historic occasion. It seems as though everything went well. I will, this afternoon, we're going to have another Twitter Spaces at 5 o'clock when we launch a whole new program for BizNews. It's called A+, Apple and Alec. Mike, Apple, and myself will be discussing the past week's news, and that'll be on Spaces as well. And we will be introducing, I think, a lot more discussion from the community in that one. Anyway, thanks very much for being with us today. Jonty, Gaurav, last 30 seconds each.
Yeah, I think, you know, from an investor's perspective, I think considering cryptocurrencies is really important, given the return profile. I think it's going to be around forever. And I think it's a really good opportunity to get some diversified exposure. You're not going to see the type of returns that cryptocurrencies have offered in any other market, but it is high risk. So don't put your house on it. Put a small percentage of your portfolio, 1 or 3%, depending on your personal circumstances, but start off with something. And that little something will keep you in the market, keep you interested, keep you researching, and then I think you'll quickly realize that this is really an opportunity to get into this market really early on.
Yeah, I'll add to that. So I think that when you dip your toe in with a small amount that you are willing to lose, then it helps you get over the fear, and you actually get to see how it goes. However, there is a bit of an asymmetric opportunity. You know, if you invest a small amount, it could go to 0, and that won't really affect your portfolio. However, even that tiny amount, if it does, like Bitcoin and Ether have already done, and goes 20, 40 times, if you invest, let's say, 2% of your portfolio, that's now 80% of your portfolio. And so that asymmetric payoff is a unique opportunity. I don't think we're going to see it again in our lifetimes.
Indeed. And on the chat box now, you can see that the link to the 5 o'clock show on Twitter Spaces with Mike, Apple, and myself. And for more information on Jaltech's cryptocurrency basket, there's the link as well to our story on BizNews. Thanks again, gents. Thanks to everybody for joining us, and look forward to the next time.
Thank you.
Thank you for joining us for this webinar, which is compiled and produced by the team at biznews.com. A recording of this webinar will be available later today on the biznews.com channel on YouTube. From our team, until the next time, cheerio.